All right, well, let's talk about the AI bubble that has now burst and what's going on. Again, we'll start off with the article right here that I created on. This is going to be on OxFriend. Again, if you want to join me, that's just going to be oxfriend.com/c/Wall Street Ox. Again, I'll leave a link in the description of the video as well. But so why did the market sell off? Well, the market sold off today, December 12th, primarily due to a significant drop in tech/AI stock. What it's looking like is the bubble is finally going to burst. I'm going to show you Nvidia and some other companies and kind of explain to you why really whatever you could squeeze out of this lemon you have, and you should really now shift and pivot. So this is why I pivoted all of my portfolio to these other investments. We'll talk about that in a second. Again, the AI stocks triggered by disappointing reaction to Broadcom AVGo's earnings, sparking fear of an AI bubble and profit taking. And again, we have known this for a long time. I'm going to show you all the data on Nvidia to prove it to you because, let's just go with the latest and greatest. So now there's profit taking after a strong run. Essentially, most of these firms, they've squeezed out as much as they can for their customers. So whatever they could make their customers, they have. It's pretty much the end of the year, and they want to make sure those funds, whatever they've solidified for their customers, stays solidified. If they made them 30, 40%, they don't want the market to drop by that, and they make them 0%, and then they lose those customers. So right now, they're going to take profits, secure those profits, and make sure those customers, those investors stay with them for the next upcoming year. Again, investors rotated out of high-flying tech into value sectors like small caps, while concerns about the persistent inflation, future Fed rate cuts, which there are basically none. We got a Fed rate cut right now for December, which is 0.25%, way less than expected. We're expecting 0.5% to 0.75. So we get the bare minimum. And Jerome Powell then said for the entire year of 2026, they expect one single rate cut of 0.25%. So that is not good news at all. Again, and then the broader economic market cracks in areas like private credit added to the market nervousness. Once you do sign up over here, we usually have a poll. Now, majority of the members right now said that yes. I asked them, will there be a Santa Claus rally? Majority of them said yes. Again, join us. You can participate. You'll also see chats on the side over here that you can join. And again, we're slowly growing back. We just started this. I've got 15 members. Very, very excited to grow this business. We're doing the 10K to 100K challenge as well. We're restarting that from scratch. We did that successfully in 2019, 2020, and 2021. 3 years in a row, which is incredible. Then we did not do it in 2022 because we did not rotate out of those stocks fast enough before that massive crash happened. And then we repeated it in 2023, which is pretty incredible. And then 2024 was also incredible because we more than doubled our money. So we had some great, great news. Very, very excited for it. Again, taking a look here, if you go to OxRank analysis tool, you can, get all of our data. You can try out this analysis tool for an entire month risk-free, get all your money back if you're interested. But once we get into, if you're brand new, click register. If you have a membership, click and log in. But once you jump in, it will take you to this main page. So we can then search for, let's say, Nvidia over here. And if we take a look at Nvidia, you can really see what's going on, And if we load up Nvidia, and you can see, over the last day, it's pretty much dumped. Over the last week, you've lost money for sure. Over the last month, you have lost money on Nvidia. Over the last 3 months, either you lost money or you broke even. And then the last 6 months, the stock has gone a little bit up. But if you go over the last 1 year, really the difference, had you bought it at the very, very bottom, okay, if somehow by miracle you timed it and you held it out through that, you would have been up 27%. Again, this is a company that was returning 1,200%, 100, 200, 300%. So at 20 some percent, you're really not doing a whole lot better than any other tech stock out there. In fact, even Google beat out Nvidia over the last year. And I'm going to show you that. So you kind of get a clear-cut picture of what's going on, and you kind of understand that the AI bubble is done. And Nvidia is kind of showing that to you. When Google returned like 60 to 80% across the last year, and Nvidia gave you 20%. So be very, very careful. Again, I don't want you, losing all of your life savings. So switching back again, this article is, if you are interested in joining us on OxRank, you can. Again, on Twitter, I also make posts on here. You can follow me at Treasury Ox. So again, my YouTube channel is Wall Street Ox, and then on Twitter, I am Treasury Ox. Now taking a look over here, let's take a look. This is the watch lists that I have for myself in OxRank. Now, as you can see, Nvidia dumped about 3% today. AVGO dumped 12%. AMD is down. Qualcomm is down. A majority of these have just really dumped when it comes to the semiconductors. Software over here, lots of selling off. Amazon is down as well. Dash and eBay are doing just fine. Okay, so we're now shifting out of pretty much tech. Now, let's take a look at Google. I really want to show you, a couple of these. So like Nvidia, if you take a look over here, this is what I was talking about. We're down a little over 3.3% on the day. On the week, we're down 5%. On the month, we're down about 7%. Over the last 3 months, you either broke even or you lost close to 2%. But the last 90 days, you would have made zero money. In fact, most people, as soon as the stock started going up, thought, now this is thing, it's going to like 300, and they bought, and then it massively sold off, and they're literally down like $50 to $60 per share. That's a massive sell-off. Just keep in mind, if you bought it at the peak, which is kind of what people buy, you would have lost. That's a good chunk of money. So let's take a look here. So 206, and then the bottom right here is 174. So, pretty much $32, $33 per share easily. So be careful. A lot of these other companies, and let me show you, 1 year out, you would have made 27% had you timed it kind of perfectly. Now, if we take a look at Google here, just want to show you, over the last year, as you bought Google, you'll be up 57, almost 58% on the yearly. So again, the shift out of AI is gone. The AI bubble is basically bursting. And even if you are making money, you are not going to make as much as the, really big companies that are going to be the market movers that have more than just some AI program that they're relying on. I kind of want you to understand a business is really safe when it has streams of income from many different sources. So you have YouTube, obviously, you have all the revenue, you have all the advertising, you have the search engine. Now you have Gemini, right? You have their own chips, you have their own cell phones, tablets, laptops. So there's so many different streams of revenue that Alphabet Google is always going to come out ahead. And if one slows down, another one can pick up pace, and they can still be in massive profits. A company that's a one-trick pony, if that pony does not perform, the whole thing collapses. So again, this is how we turn 10K into 100K by really, or 100K to $1 million, by really kind of focusing on what company has many different ways of making revenue, streams of income, and which company is obviously positive margin. That's a very big thing. But on top of that, I want companies that really people rely on and will rely on forever. They're true monopolies. That's the key to success. Again, so I always look for a monopoly. I look at the, price to earnings ratio, that P ratio, margin, the competition. Is it falling behind? Is it catching up? So when I look at Google, the competition is just so far behind that I have no interest in even, attempting to buy any of their competitors. If this is the sector I want to get into, I'm buying Google. So, again, if I want to get into advertising stocks and, metaverse, whatever that combo, I'm getting Facebook. So I think Facebook right now is dirt cheap, and I'm continuing to add on Meta shares. Again, thank you for watching. If you're interested in trying out, follow me for the 10K to 100K portfolio, just check us out over here. You can try the analysis tool at oxrank.com. And, you can try out our software. And again, you can also join the 10K to 100K portfolio at oxfriend.com/C/Wall Street Ox. Again, those links will be in the description of the video as well. Thank you for watching, and take care.